Warren Buffett's Berkshire Hathaway is making waves, but not in the way you might expect. While operating earnings are soaring, the legendary investor is holding tight to his cash, sparking both interest and debate. Let's dive into the details of this financial powerhouse's latest moves. On Saturday, Berkshire Hathaway reported a stunning 34% jump in operating profit. This surge, reaching a cool $13.485 billion in the third quarter, comes from the conglomerate's diverse portfolio of businesses, including insurance and railroads. The insurance sector alone saw an incredible rise, with underwriting income rocketing up by over 200% to reach $2.37 billion. This is a testament to the strength and resilience of Berkshire's core businesses. But here's where it gets interesting. Despite these impressive gains and a dip in the stock price, Buffett chose not to repurchase any shares. In fact, there were no share buybacks during the first 9 months of 2025. This decision has led to a significant increase in Berkshire's cash reserves, which now stand at a record-breaking $381.6 billion, surpassing the previous high of $347.7 billion set earlier this year. And this is the part most people miss. Buffett's team also didn't find other stocks attractive, net selling equities in the third quarter for a taxable gain of $10.4 billion. This strategic move highlights Buffett's cautious approach, waiting for the right opportunities to deploy capital. Adding to the intrigue, the company's shares are up 5% each in 2025, while the S&P 500 is up 16.3%. This difference might make investors wonder if Berkshire is underperforming or if Buffett is playing a longer game. Furthermore, the upcoming transition adds another layer to the story. The 95-year-old Buffett is stepping down as CEO at the end of the year after 6 decades, with Greg Abel, the vice chairman of non-insurance operations, taking the helm. This change has caused the Omaha-based conglomerate's shares to tumble double digits from all-time highs, reflecting the so-called Buffett premium, or the extra price investors are willing to pay because of the billionaire's unmatched record and exceptional capital allocation skills. However, Berkshire is still actively seeking opportunities. Last month, the company announced a deal to acquire Occidental Petroleum's petrochemical unit, OxyChem, for $9.7 billion in cash. This is Berkshire's largest deal since 2022, when it acquired insurer Allegheny for $11.6 billion. Overall earnings, which include gains from Berkshire's investments in other publicly traded companies, rose 17% to $30.8 billion year-on-year. So, what do you think? Is Buffett's strategy of holding cash and waiting for opportunities a sign of caution or a smart move? Do you agree with his decision not to buy back shares? Share your thoughts in the comments below.